Hey everyone, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. If you're new here, please take a look around. My channel is all about learning how you can find wonderful stocks, watching my journey through my Robinhood challenge, and just overall showing you how I make my investment decisions. So one we're going to look at today is mainly focusing on the investing side. So I'm not sure if you guys are aware or have heard the news, but Japan has approved an $8.1 billion USD Osaka resort with MGM owning 40% of the stake of this project. So I want to look at MGM stock. We're going to look at their balance sheet. We're going to look at their financials. We're going to look at the chart, and we're going to read through an article and just see if this is a good idea, a bad idea, what to expect, where the share price could go, etc., etc. So without further ado, let's jump into the article to get the details. All right, we are reading this Reuters article that says Japan approves $8.1 billion Osaka resort, the country's first casino. Pretty amazing. Just going on down here, it says MGM Resorts, Oryx to own 40% each. So if we are looking at 8.1 billion, I guess I'll do that out longhand, 8.1 billion times 40%, it's about 3.2 billion to MGM. Let's remember that number. 3.2 billion MGM's part. Okay. Going on down. This April 13 story has been corrected to fix initial investment amount to 1.08 trillion yen, 8.1 billion, from 1.8 billion yen, 13.5 billion. In the headline, okay. Japan approved a plan to build the country's first casino in the western city of Osaka, paving the way for a 1.08 trillion, 8.1 billion USD resort set to open in 2029, so 6 years from now, aimed at attracting domestic and international tourist spending. The giant resort complex is located on Yumeshima, a reclaimed island in Osaka Bay. Due to hold the World Expo in 2025, will also include hotels, a conference center, shopping mall, museum, ferry terminal, while high rollers will have access to an adjacent helicopter pad. Casinos were previously illegal in Japan along with other private gambling, but a 2018 integrated resort law provided exception to casino games such as poker or baccarat, officially approved establishments as part of an effort to attract tourists. Japan is seen as a prize market for casino operators because of its affluent population of 126 million and proximity to Asia's wealthy gamblers, although opinion polls have shown many citizens worry about addiction and crime. U.S. casino operator MGM Resorts International and local partner Oryx Corp have spearheaded Osaka IR project with each owning a 40% stake, that is 3.2 billion each, in the company set to manage the complex. Another 20 companies hold the remaining 20%, according to a local government document, which said MUFG Bank and Sumitomo Mitsui Bank Corp would provide 550 billion yen of the project financing for the resort. Prime Minister Fumio on Friday said the project would contribute to the economic growth of the Kasai area around Osaka and Greater Japan after World Expo 2025, as the country aims for a post-pandemic rebound in tourist spending. The resort is targeting 520 billion yen of revenue annually, most from the gaming business, and forecasts it will attract 6 million international tourists and 14 million domestic visitors, the project document showed. MGM Resorts, Oryx, and Osaka City and prefecture governments said they welcomed the approval and would work together to develop the project. The national government's decision came after the pro-Casino Japan Innovation Party retained the prefectural governor and city mayor offices in Osaka on Sunday. A Mainichi newspaper poll of Osaka residents this month found 45% of respondents in favor of the casino, 38 against, and 17 undecided, although women and the elderly were more likely to be opposed. Japan's casino plans were hampered in the past by the coronavirus pandemic and bribery scandal that led to the arrest of a high-profile lawmaker. Major casino operators Las Vegas Sands, Caesars Entertainment, and Wynn Resorts withdrew from planned projects. Only Osaka and the southwestern prefecture of Nagasaki submitted bids by an April 2022 deadline. The government on Friday said it would need more time to review the Nagasaki plan, led by Casinos Austria International. It did not provide a reason. And at the writing of this article, $1 equals 133.74 yen. Interesting that Wynn Resorts withdrew because I know Steve Wynn is a really entrepreneurial, and I know he's not at the helm right now or anymore, but Wynn was always at the forefront of breaking in new casinos. So that was interesting to hear. So now that we know that Wynn is going to carry $3.2 billion into this project, let's look at Wynn's financial data points, and we'll look at the chart as well. All right, you guys, we are on finviz.com. I highly encourage you to check out this website. And if you've made it this far, please hit the like and subscribe button. It really helps out. So looking at the chart right here, we can see, I'm circling right here, it looks like a very bullish move from 26 and upward. It's now at $44. We're going to see tons of resistance around the $51 mark. But now the question begs, is this overpriced or is this underpriced? Let's dig into the details. All right, so what we're going to do here, we're going to look at sales plus income. We're then going to include debt. We're going to add debt. We're going to add cash, and we're going to add the market cap, and we're going to divide it by the shares float to figure out the true stock price. And since we're in billions in sales and millions in shares float, we do have to type this out longhand. So this is what it looks like. We're going to do, you guys can see the calculator, 13,130,000,000, correct, plus 1,440,000,000. Yep, plus, and we're going to go down to, let's look at the cash and the debt down here. Cash is 5.9 billion plus 5,911,890,000. Right here, 5,911,890,000. Yep. All right, so that puts us at 20.4 billion, but now let's add the debt. Total debt is 8.8 billion, so minus 8,879,890,000. So that puts us at 11.6 billion. And we're going to divide that by the shares float of 306 million divided by 306,130,000. So that gives us a share price of $37.89. And right now the stock is at 44, so it's a little bit overvalued. If we don't include any of the debt or cash, we just take the 13,130. The 13 billion plus the 144 billion. And then plus the 16,630 billion. That gives us 31 bill, and then divide that by 30613 million. So this is showing on the $101 stock price. That's if we're not including debt or cash. So that's a huge range between 37 and 101. Let's do plus 37 divided by 2. $69 average if we're looking at the really aggressive and the really conservative. So $69, that's interesting. The analysts have it at $54.82. JP Morgan has it at 53, Morgan Stanley 39, Barclays at 60. So it's getting up there. Let's now look at the chart and see what we think the stock actually could be worth. So MGM. All right, so the stock is doing really well. It got down to $1.81 back in 2009. It was $1. That's crazy. It's the power of investing. Okay, so let's just add some more charts here. Should I clean this up? I don't know. I think we're just gonna keep it. Let's I'm thinking we're in a descending, no, ascending wedge, but not really. We were in an ascending wedge right here, or ascending triangle. So you can see it come up here and then boops, it falls out and then it's coming back up. So that's a bearish pattern. Fell through, it found support at 26 and now it's moving its way back up. Doing this, I'm just creating a channel here. Gosh, like right here. I apologize for all the lines. Let's just create a new one. We're just creating a new line. Okay. So we want to do. So what I did here is I created a channel. We can see its support. It bounced off here. It's hitting its head up here. It bounced off here, hitting its head here, bounce, bounce. And now it's kind of making its move up. Let's look historically at the stock price to find the lowest low and the supports. So if we go all the way over here, at the very beginning, okay. So this channel right here, if you can get the stock price within this little channel, that's gold. All right. So that's historic supports and resistances, I guess. Now let's go from the tippity top. So $100 is the highest ever resistance. And we have the next resistance right here. I could go right there. Let's go right there. So, can you guys see this? We have resistance, resistance, resistance. Boom, it explodes up. This candle right here bounces off it, showing support, and then it falls through. And then we have resistance, resistance, resistance all right here, resistance again. So it's kind of in a tight pattern right now. So if we had to do Fibonacci arcs, so this is a good one. So we're going to go to the nearest low period here and the highest high period right here. So we can see, let me just blow it up real quick for you guys. Yes. So we can see this is respecting the Fibonacci arcs really well. Right here we have, this is resistance, 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 breaks through, resistance, resistance, goes up, shows some resistance here. Now this is acting as support. Now it's acting as resistance, 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 resistance. This candle show it's acting as support, but it's acting as resistance again. Breaks through, showing us support. And now we're like right here. This next month or so is going to be really interesting to see what's going to happen. Las Vegas has been on a tear in terms of earning money from gamblers out of town. So basically, if you bought this stock last October of 2021, you have made no money. If you bought this stock in 2005, July of 2005, you've made no money. So, the times you really want to buy this stock are the heavy capitulation moments. Like right here, this was the pandemic, I believe. Yep, March 20. Could have got it at $5. and rode it for a 10x almost, pretty much 50 bucks. Um, so it's right here. We're getting mixed signals in terms of overpriced, underpriced. Um, let's do a little bit more charting to see. So now I'm going at the highest high, and I'm at this next highest high, which is that red candle. Touching it right there. Okay. So we can see the stock price has never broken above this line right here. And let me just zoom out actually show you guys. There we go. So back in 2007, it was at $100 and the stock price has never broken above this line that I'm highlighting right here. I'm bouncing off of it. It tried to break it in 2021. It could not. It tried to break it again in 2023. It could not. So now it's kind of a wait and see moment. In terms of patterns, we don't really have like a solid pattern here. We can keep drawing lines of support and resistance. Let's go to 181 here. Let's see. Let's go 181. And then we can go to this line right here. This has always acted as a good support. And then like this. So here's our channel that we're in. It's gone support, resistance, support, resistance, support. It broke through support, reconfirmed the support here, resistance, 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 fell through, created more support. So again, we're in like this diamond apex. Is it going to break up? Is it going to break down? My only reservation about this is that it's already ran up 100% from $26 a year ago, back in June. So it's up over $100 in a year. Looking at the stock, it kind of does those kind of things. So $1.81, it ran up to $16 and then just traded flat for a long time to $10 and then $10 to 27. So that's a 100% move and then back down to 16 to 36. That's a 100% move. And then all the way back down to $6.50, $5, $5.50 to 50. Again, that's almost a 10x move. And then down to 26, which is about a 50% loss. 26 to 44, that it made a big 100% move there. So every time it does like a 100% move, it does a little pullback. So 2029 is going to be right here, along over here. So yeah, I think we're okay to wait this one out. You guys can see my screen again. Let's look at and see if institutions are buying or selling. So we're going to go to Fintel and we're going to type in MGM. Now, do you guys think institutions are buying or selling? As of the last reporting period, institutions owned 68% of MGM. And now they own, drumroll, 74%. So institutions have been adding. Vanguard decreased big time. BlackRock decreased quite a bit. IAC Interactive added. T. Rowe Price created a new position. So I'm a little hesitant on this one just because I think it's trading around fair value 37.44 with a median price of 69%. Over the past 5 years, sales are up 4%, earnings per share 30%. And, we just went through the great lockdown, which, Vegas was shut down at one point. So, this is not a bad price here. If you are planning to add this long term, the next couple years are going to be really choppy. So be careful. And also the stock just went from 26 to 44. So again, I'm a little hesitant there. I would be a little careful. But yeah, I think that's all I've got for you guys. Let's see if institution or insiders have been buying or selling. Okay, so the chief operating officer just sold 50,000 shares. So it looks like she just sold 25% of her total holdings. Director sold all of their shares. CEO sold 110,000 shares. Wow, it's more than half of what they did have. Um, Jeez. A lot of insider selling around $40. So just a heads up. We did have some insider buying at 35 and 34. We did see these in Fintel. Um, okay, so the CEO, I just want to look. CEO William Hornbuckle, he gets 10,000 stock options, 17,000, 38,000. Still not enough to recoup the 110,000 that he sold, so or she, whoever. Um, Interesting. Income, cost of revenue really high. Their net income is growing. That's good. That's good. What's their profit percent? 11%. That's good. I mean, this is like a healthy, good company to have in a long-term portfolio for sure. Balance sheet, they're growing their cash like crazy, but they are spending 3.2 billion. So total assets 45.6 billion, total liabilities 40.8 billion. That's really close. That's too close. If they have like a really bad month, that's scary. That's really scary. They're like cutting it close. Uh, so yeah, this company is a good, I would say it's decent long term. If as long as you can ride the ups and downs. We saw it go from 50 to 26. So if it can go from 50 to 26, it might go from 40 to 20. So just be careful. Um, but yeah, I think that's all I have for you guys. I am a little I don't have any feelings for this. Um, if MGM can get down below 30s, I think that's going to be a steal of a deal. If we have a big capitulation day in the markets because XYZ war breaks out or something in the headlines causes stocks to sell off sharply, and you can get this around, gosh, what are the juiciest discounts we've seen? So we've seen $1. Let's just do this. $1, $5, and now probably $10 over here. So in 2031, we could see it probably get to $18. And I say that because oh you guys can kind of see it. Let me move my monitor. Yeah, you guys can see it. There we go. Okay, so every time it gets in this crevice, it hits like an all-time low. So we have $1 here, $5 here. And if we go off of this trend, 181, I'll have to adjust it. 182, that's fine. Like right here. So we can see this intersection right here, money. So again, buy, buy, potential buy. We never know. So if you got patience, think about waiting several years. But I mean, this is a solid hold if you're trying to get long-term cap gains. You got plenty of time to potentially get some appreciation there. For me, I don't see the value. I like the more aggressive stocks with more aggressive patterns and more um, notable moves and not as well-known companies. So with that, I appreciate you guys. If you made this far, consider liking and subscribing to my channel, and I hope you are doing well. I'll talk to you soon.